Alright, well, let's go ahead and get started. We got a good bit of people in here already. So, just let's get a quick verification. We got sound and we got video for everyone to see. Make sure that's all working. Just give me a yay or a nay, and then we'll go ahead and continue on. Yes, yes, cool. Alright, great. Well, welcome again to our Tuesday night free webinar series. My name is Nate McGee, and as some of you may know, I'm the Forex live trading specialist here at Microquant. Tonight, we will be discussing multiple time frame analysis. It's a pretty simple concept once you get it. I'll try to make it as easy as possible for everyone to understand it. As usual, if you have any questions throughout the webinar, just go ahead and submit those over there on the Go to Webinar side menu, and I'll answer those as I see them. And naturally, if it'll take too long to answer, I'll just kind of move it toward the end, so that way we won't hold anything up. But the webinar tonight shouldn't be too terribly long, if all goes well. We also have to go over these risk disclaimers right quick before we get into it, so I'll just go ahead and start reading this off here. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage which may result directly or indirectly from such content or from an inability to access such information or any delay in or failure of the transmission or the receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration and example only, are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. Along with that, we are also required to put up this CFTC Rule 4.41, which is a government required disclaimer. All it says here is that everything mentioned in the presentation is hypothetical because it has happened in the past. Therefore, it doesn't have any value now because hindsight is always 20/20. If you have any questions about these, feel free to email us at support@microquant.com and we can explain them to you or send them over to you so you can read them yourself. Alright, multiple time frame analysis. What we will try to cover here tonight will be what multiple time frame analysis is, the purposes of multiple time frame analysis, some of the concepts of it, the key concepts to utilize it properly. I'll give you some general guidelines for establishing your time frames and such like that. Plus, I'll also discuss some time frames for different trading styles, whether that be position trader, swing trader, etc. So, to get right into it here, what is multiple time frame analysis? I'll go ahead and define it here to try to demystify the jargon here. It is basically the process of analyzing a currency pair, or any other instrument for that matter, across multiple time frequencies. Multiple time frame analysis is just a fancy way of saying that you're going to look at more than one chart. That's really all it is at the end of the day. Some people, ironically enough, will trade just a 30-minute chart and wonder why trades go against them and things of that nature. So if we use multiple time frame analysis, we can kind of avoid that sort of issue. The purpose of multiple time frame analysis is to gain multiple vantage points of a currency pair to better understand what's going on. Now I'm saying currency pair because I'm primarily a Forex guy, but this applies to any market or instrument you are trading. So keep that in mind. It could be, it's for futures, it's for stocks, for everything of that nature. And the purpose of it, as well as to gain, we'll have a better understanding of higher probability trade entries and exits. A way you can kind of think of it is if you were to meet someone in person, if you meet them the first time, you don't really have the best idea of how to size that person up. You'll need a few different meetings, that sort of thing, to kind of get a better understanding of who they are. That's the same concept here with multiple time frame analysis. You look at the market and you look at different vantage points so you can kind of understand what the market is doing to better understand that quote unquote person or whatever it is that we're trading, that sort of thing. There are some key concepts here that you kind of need to understand. You want to choose time frames that will line up with your personal trading goals. What this means is if you're more of a swing trader or whatnot, if you don't have enough time commitment to the markets, you need to pick and establish time frames that line up with those if you're more of a patient person or if you're more of a fast-paced person. So we'll talk about that a little bit later as well. It's also important to know that trends exist within trends. So what this kind of means here is that you will, when you do multiple time frame analysis, you will get conflicting views across multiple time frames. It happens all the time. I get questions all the time actually when I'm trading, why are you trading counter trend, that sort of thing, and that's one of the concepts to understand here. But we'll kind of demystify this a little bit and show you examples of how this kind of works in your favor sometimes. Not all time frames work together. We'll discuss this as well. For example, if someone is a position trader looking at monthly charts, weekly charts, daily charts, it's kind of irrelevant for them to be watching the 1 minute chart. That kind of makes sense. So it's kind of irrelevant, and there's a big disconnect between what they're trading at that sort of time frame. If you have too many time frames, you can definitely result in having redundant analysis and waste your time. On the contrary, if you have too few time frames, you will have a considerable loss of data. So you may be wondering why you get stopped out on a 5 minute chart all the time. It's because maybe there's a 30-minute trend line or something like that. You're always confused with conflicting trends and the multiple time frames. Yes, Naga, we will go into that. I'll try to break that down for you a little bit if I can. Now that's the basically the key concepts there. And what we're trying to do here is we're trying to figure out where a currency pair or any instrument for that matter, where it is in the quote unquote trading cycle on different time frames. So here we go. Like I said, this webinar itself probably won't be too incredibly long. I'll go through some guidelines. We'll give examples here, and then we'll have plenty of time for Q&A here. So again, if you have any questions, just go ahead and stop me, and that'll be just fine with me. We'll get into some guidelines at first here. What you want to do, for the most part, is establish 3 different time periods. By doing this, it'll give you a broad enough reading on the market. As with most things in any industry or market, that sort of thing, there's always these rules and guidelines to follow, which I will talk about here. But at the same notion, as you become more experienced with them, you can still follow some of these guidelines, but you can still branch away from them as well. Once you start getting the understanding of the markets, you can it's a lot easier, I should say, to break out of the different guidelines here. There is a rule out there, quote unquote rule, called the rule of 4. And what this is you want to establish a medium period or time frame. That should be one of your first determinations to get an idea of how long your average trade should be held. So if your medium time frame is a 4-hour chart, you can get an idea that you want to hold a trade maybe 4 hours or 12 hours, that sort of thing, a couple of days. Then you should establish a shorter time frame. This is really where you're going to enter at, and it should be basically 1/4 of the medium time frame period. For example, if your medium time frame period is a 60-minute chart, then your medium time frame would be 15 minutes. For your shorter time, that's where you're going to be doing your entries. Also, there should be a longer time period, and it should be about 4 times larger than the medium time frame period. So sticking with that same example of a medium being 60, a 240 minute would be your longer time frame period. So your 3 time frames here would be a 240, 60, and 15. And that's basically what the rule of 4 is. However, I would say anything between a 1 to 4 to 1 to 6 is fine. It gives you a good view between trend entry, gives you a good picture. Anything less, you might see the same data. Anything more than that, there could be a disconnect in data. All right, and sticking with this, I still recommend that everyone would look at the daily chart at all times. It doesn't matter if you are a position, swing, intraday, scalper, that sort of thing. I would still recommend everyone look at the daily chart no matter what. That's what I do. And I know Thomas does that as well, many other traders also. Continuing on, the best setups are those that are in agreement across your defined time frames. What that means, it'll be all bullish for an uptrend and all bearish for a downtrend. Whenever your smaller time frames are in agreement with the longer time frames, is just like aligning the tumblers in a lock. It opens up easily. Your trades are a lot more successful, that sort of thing, and it definitely helps you out. But if you ever get conflicting views, like your 240 is bullish and your 60 is bullish and then your 15 is bearish, a little bit conflicting. Might not be the highest probability of success, but we'll kind of touch on this as well a little bit in further here. We'll kind of break down these 3 time frames here. The longer time frame is to typically determine the dominant trend. And you've heard the old adage, the trend is your friend. That's basically the concept you want to follow here. However, this doesn't mean you can't trade counter trend. It just basically means that there will probably be a lower probability of success. And what you should do is, when you go counter trend, is just set your profit targets. They should be a lot smaller than what they would be if they were heading in the direction of the overall trend. All the time people ask me, why are you going counter trend all the time? I do it because I don't want to wait necessarily for my entry point with the trend, so I go short, then get out of it, or go counter trend, then get out of it, just so I can make money both ways. But I don't have the same sort of profit targets and distance when I go counter trend as I do when I'm going with a trend. Your medium time frame, this would be the most versatile of all the time frames that you have established. You can get a good sense of the longer term trend as well as a shorter term trend, and you can find a good direction, good entry here. This is where you will spot your trade setups really. You will, the smaller moves that are of the broad trend will be more clearly seen. And this really should be your most frequently followed time frame whenever you're planning to make a trade, you're in a trade, or when you're setting your stop loss and target profits, that sort of thing. This time frame is basically a marriage between the price action on the short time frame and the long time frame. It gives a really good picture of what's going on. And the short time frame is where you should try to enter on, because you'll have the smaller price fluctuations that will be seen more clearly, and you can find definitely a more attractive entry point. One thing to mention here, the fundamentals aren't really discernible below 4-hour chart. Anything above 4-hour chart, you get a lot of fundamentals playing into it, especially in the weeklies, the monthlies, dailies, that sort of thing. Fundamental data really affects the overall trend. But once you get past the 4-hour chart, the fundamentals don't affect it as much, in the sense they won't get to see the broad trend. However, the fundamentals do affect it. You'll see it basically based off increased volatility. You'll see really explosive moves that happen, that sort of thing. And it's just worth noting that most of these kind of explosive moves, they're more short-lived than they are with the dominant trend. So that's one thing to keep in mind. And again, we'll actually, I guess, quantify, put numbers to these longer, medium, and short-term time frames here in a second. What I just want to mention here, I guess, to give you an analogy, to make it, I guess, easier is just think of it almost as like an ocean. An ocean has a tide, low tide and high tide. It goes one way or another. And then in the ocean, the tide, there's going to be waves, obviously. And on top of those waves, there's going to be wind ripples that happen. But the wind ripples, they're not the ones that are determining the overall trend. The tide is. You can still surf when the tide's going out. So that's kind of one way I like to look at, visualize it. I mean, there's many analogies I could give, but that's what you want to kind of understand here. Are we all good here? Does that make sense so far? Okay. Can I define it better? Can I define it better? I guess I could. Let's say, I don't know if anyone has kids. One way you could look at it is, I'm sure you've all dealt with it before. Put kids' cartoon on, then inevitably one of them was up there with their face sucked up against the screen, watching TV for some reason. You tell them to back away. It's kind of the same concept here as well with short time frames. Sometimes we get caught looking too close to the price action. We get really into it because, quite frankly, it is pretty boring to just watch a daily chart or a 4-hour chart unfold. It's not very entertaining. That's why a lot of times people will look at the shorter time frames because the action's there. But you just kind of want to back away. That's one way to look at it. You want to enter in a short time frame, sure, but remember the overall trend. I mean, that's one other way I guess I could explain it. All right, good. You're welcome. Here we go. 4 position traders here. I'm going to give you a couple of recommended time frames here. Your long time frame should basically be the monthly chart, which would be 4 times your base, which your base is the medium, which will be the weekly time frame. This is going to be that one that gives you a good idea of both a shorter term and longer term outlook. And then your entries on your shorter time frame will probably be the daily chart, and this is 1/5 of the base. Now keep in mind what I was saying earlier about that rule of 4. You don't have to follow it per se. And that is one of those little standards type thing that everyone has, but excuse me. But you want to make sure that you're looking at charts that everyone else is looking at. You don't want to be trading on a 13-minute chart if no one else is looking at a 13-minute chart, or that sort of thing. A 270-minute chart, like weird things like that. And the ones I recommend here, by no means does this mean this is the go-to time frames. These are just some good recommendations, like typical that I see out there, and the way I kind of trade as well. But these could definitely vary for each person. These are just, like I said, some recommendations, and I will show you kind of how they look with some examples as well. One thing to keep in mind here, though, that basically the fundamentals are going to be the ones that are affecting these time frames, especially for position traders here. So we'll just look at it right here. We'll start drilling down. In this example here, downtrend for the CAD Swissy. It's defined by the trend line for one, but we have our lower highs and lower lows, as can be seen. Looks like we could be pulling out of it here, though. Notice that the most recent low last month wasn't as low as the previous low, and we kind of have a bullish candle that's forming right over in let me just right there in here. That's more bullish. Okay, and we didn't make a new low right there from that previous low. We didn't beat this low here, so we could possibly be coming out of that downtrend. It's hard to say though. So this is our long term. We see the overall trend is down, so I'm looking for short positions. So we go down to our medium time frame. Here is our weekly chart. The purple trend line is basically a continuation from the monthly trend line, what it looks like. So we have definitely a better view of what it looks like here. You can see a lot more candles going on, you can see how close they've gotten to that trend line. Look in the past here, looks like the trend line got pretty close right in here, the price. But when we look down that one step further, we can see it really did get pretty close right in there to touch it. And we can see over here as well that we are still in a downtrend. Nice confirmation of that. We had bullish candle right here the previous week, and then this is all, these pictures have been taken this current week that we're in right now. So you can still look at these charts as well if you want to, but we're still in a downtrend here. Pretty well in downtrend. So we're looking for an entry point here. We're trying to still get short. So I'm going to go down to my daily chart here. And this purple trend line here is from our weekly chart. Continuation here. And this white one, this is just based on the daily here. And you can see we had a nice price bounce all the way up. And we had a false break to a trend line here. And it came back down and pretty strongly, to be honest with you. Nice bearish candle. And it looks like it's going to continue to head on down here. When it opened up, it's still a downtrend. And there you go, that could be an entry point for a short. All 3 time frames were in agreement. All bearish. And we look for it to pop up into overvalued. Gotten a good price right near the trend line. Short near the resistance level. And that's how you would trade that. That's that top down approach there. And it's pretty simple in a sense. Does that make sense so far to everyone? I mean, hopefully this isn't like, what's the guarantee that it won't break out? The guarantee that it won't break out, there's never a guarantee in the market per se, but we're still in a downtrend. We know the overall trend is down, okay, but we're still in a downtrend pattern of it being lower highs and lower lows. We haven't seen anything change that yet, so we're still looking for that to continue on down. And the psychology behind this candle right here, the red one, that did a false break and closed near the low, shows it's very bearish still. Doesn't show me any signs that it's really bullish. And that shorter time frame, it's just, I said, it's a long, huge downtrend from the monthly chart. The thing is, whenever you do these trends, like, you could go counter trend. So say, for example, I had to buy some down here. I went ahead and bought it. If I go wrong, you know, I get stopped out or something like that. But when you go with the trend like this, when you see longer term trend, chances are, even if you mess up this trade, like if I got short right here, and depending on where you put your stop, in the long run, in a sense, when you go with a trend longer term, sometimes your messed up trades can still be fixed because the trend will still go down that direction if you go with a trend. But if you go counter trend, the chances aren't as successful. So like I said, there's no guarantee that won't false break, but you just got to understand that we're still in the downtrend. We're up near resistance, and the false break to pull back down, that's still a bearish sort of sign. That it's not like, oh, it's bullish. We're in the overvalued prices right here as well. So we expect to have a little bit of pullback there, at least down to that 8 EMA or something like that. Does that make sense? All right. Continuing on now, let's go over to a swing trading type thing. Give you some recommended time frames on this. We'll go through some more examples as well. So long term sort of overall trend, look for your weekly chart. This will be 5 times your base, and your medium time frame will be your daily chart. That'll be your base time frame where you get to see that longer term outlook as well as that shorter term direction, hopefully. And then your entries will basically be on your 240 minute, and this will be 1/6 of your base. Okay, so it's 24 hours in a day. 6 times 4 is 24. So that 240 minute, which is 4 hours, that's kind of how I broke that down. Plus weekly chart, 5 times base. Okay, you have 5 trading days for the most part. And the Forex market, I mean, you can count Sunday if you want, but that's still, we're still in that 1-4 or 1-6 ratio for determining our time frames here. So look at the euro yen for this one. We're in an uptrend from what I'm seeing here. That trend line is pointing upward. However, it does look a little bearish to me. Okay, starting to weaken. It looks like price have fallen down. It's coming close to that trend line. So it could be an opportunity to go ahead and take a buy order. And we take a go long right down here toward this trend line. So we got the overall trend. Looks like we're going up. Look now at our daily chart. This is, we're kind of going to see both sides of it. Purple trend line is based off the weekly chart here. That white trend line is just based off the daily. Let's do it across these lows here. Connect them right there and right there. And you can see prices right down there just to touch it. So that's an excellent buy signal. We're undervalued as well. However, I didn't put momentum on here for a reason, not to see if there's any bearish divergences or anything like that, just to show you price action solely. So keep that in mind. But one thing I noticed right here is we had a double top. That's a bearish sign. Had a pretty huge bearish candle to the downside here. Okay, so that leads me to believe that maybe there is a little bit of inconsistency from the uptrend that we see on weekly to maybe start more of a bearish move here on the daily. So we gotta keep that in mind. So I'm gonna look for an entry point though, because we are near that trend line. So I kind of want to take a long position here to see if I can ride it out, maybe at least make at least a new high. We'll see though. So let's go down to the next time frame, which would be at 240. Red trend line here, or maroon, pink, whatever you want to call it. I made it red, but it looks kind of pink on here. But that is from your weekly. Purple from daily. Now I have a trend line here drawn for the 240, but I did draw one here across these lows. You can see the micro trend inside of our overall trend here. You can see we had downtrend right here inside of our uptrend. So you have an uptrend inside of a uptrend, that sort of thing. So this is where that trend inside of a trend concept comes in play here. Now right here, prices got down to that weekly level. We also have a support here at 132.67.2 that is used as support right here. Good bit of support right in here as well. So we had a hit right down here and right down here. That's some pretty significant support, it looks like to me, especially since we're on a daily trend line as well. Also, we have a double bottom here. Okay, here's that first low. That next low, that's more of a bullish sign to me as well. So if I want to make an entry point here, you know, I would set my profit target. We'll take my long right here. I would set my stop personally below the trend line. That's just me across the daily. And profit target would be up here. I mean, look, it looks like there's a good bit of resistance right in this area. You can see we didn't really make any new highs here. That's really a consolidation point here. And we're definitely undervalued. This thing could have closed out like in a golden doji, which is a nice candlestick reversal as well. So there's my bullish signs. I would take the trade personally, but when we look back at the other time frame, right here, I mean, we all know this looked kind of bearish to me, so it's hard to say. If you want all the agreement to be in place, of all three time frames to be bullish, then this daily, I should say, could mess that up. Again, this is just kind of the concept you want to follow. It's all about your confidence personally. Okay. Does that make sense as well? Why do I set a profit target there on a 240? Well, just because I'm entering on the 240 and I'm a bit iffy about the daily. I'm not sure if it's going to break. I mean, if I keep a tight stop loss, that's fine, but we aren't undervalued, so I'm assuming it's going to bounce up. But we had that huge drop down, double top. You know, I would expect a little bit of pullback, sure, a little bit of retracement, maybe up to like this area here, if I'm based off the weekly chart. But I should have put momentum on here. I guess I should have done that. But momentum, I think, is weakening when we look at this one right here, because we had doji there. So that could just be more of a continuation sort of thing. And along that, you kind of got to understand the personality here of the yen, euro yen type thing. Can you use tick chart as well as time chart the same way? Yes, Joseph, sure can. Like I said, my recommendations aren't set in stone. These are some things that you can use. I mean, I like using dailies along with 2,000 ticks, 240 minutes, and I like entering on 30 minutes sometimes. It just depends on, sometimes it depends on the instrument you're trading, that sort of thing. But yeah, you just kind of want to establish, the concept itself is you want to establish decent time frames with good separation between the 1 to 4 to 1 to 6 sort of thing. If you do anything else, if I'm looking at my monthly chart and I'm trying to enter in on a, well, actually, let me say it this way. If I'm using a daily chart to determine the trend and then try to enter in on a minute chart, there's a humongous disconnect there. There's 1,440 minute candles in a day. So looking at a minute chart, that trend could be all over the place. And it's so reactive down there, so explosive of moves, you know, I guess not that pretty easily and just miss total sight of the overall trend. How long will those trends be valid? I can't say how long they'll be valid, but what I can say is a lot of times they're shorter. Like the announcements that come out when they explode up one way or down the other way, that sort of thing. Sometimes they don't stay there as long as the overall trend. So I can't really give it, there's no real defined way they'll be valid for. But just keep in mind that you want to kind of be with that overall trend. Rather, what should be my exit? For your exit, depending on how you want to do it, if you have an agreement on all time frames of the direction of the trend, your exit should be based off whatever like is reasonable based off, you know, the weekly chart. If you're using a weekly chart, okay, I want to go to the next support level or next resistance level. If you're counter trend, when you enter it on a trade, you want to make sure your stops and target profits are a little more realistic. You don't want to assume it's going to go to this crazy high resistance level or crazy low support level because it is kind of a trend. I'll give you an example here actually on the next charts. I'll show you what I mean here for intraday type stuff. So for intraday trading, day trading, that sort of thing, here are just my recommendation time frames here. Your long should be your daily. That'll be your 6-time base. Your medium time frame will be the 240 minutes. This would be where all you'll be looking at for both longer term and shorter term direction. And then your entry position, your shorter time frame, would be the 60-minute chart, which would be the 1/4 the base. So I'll go through these 3 right quick, the examples. I'll back up to a picture and I'll show you kind of what I mean when you go counter trend here. So this is going to be in crude oil. This is on a daily chart here. We're in a downtrend. I think we all can see that. Been moving down steadily. We're doing the lower highs, lower lows. So I'm looking for a short. Go down to my 240 now. You have a much better idea of what's going on here. The purple trend line again, that is based off our daily. So you get to see how far up we have to go to retest the daily trend line. But on our 240, we have a decent trend line down there across those highs. And, you know, it's kind of iffy that where the prices are at down here. It's just, looks like there's a good bit of support down there. Okay. We look over here at our 60-minute for entry point. The purple is from the 240, and the white trend line here, that's based off the 60-minute chart. Now what I'm seeing down here is a lot of indecision. I'm more neutral here. Okay, we were in downtrend on the other two, but right now I'm kind of neutral, just sideways, because we're inside of a pennant, and a pennant, as you know, is it could break either the upside or the downside. All right, you know, we have higher lows. We also have lower highs. There's no real like clear definition of which way it's going to go. up against another support trend line here, so that could bounce back up, could break to the upside, who knows. So right now, depending on how you want to strategize, if you want everything to be in agreement, for confidence sake, you probably wouldn't take a trade here unless you want to go with the trend. You would want to trade a breakout to the downside here. That would be the best way to trade that. And this is where that conflicting views thing sort of comes into play here. Do you want to trade the breakout to the upside? How long will it run to? Will it run up to here? Will it keep going all the way up? Who knows? It's hard to say. So for me, I probably wouldn't get on it. Daily was undervalued. Correct. Now here's where I'm going to give you the example here to kind of show you how you can still trade counter trend. I trade counter trend all the time, but I set realistic profit targets. Okay. People ask, like, how do you do this in the downtrend? How'd you go long on it? Well, I'm primarily a reversal trader, for one. So I like to catch huge changes in trend, that sort of thing. But I like riding the trend as well, so I also ride at both sides of it, kind of like you would in a channel. So let's go back here. Right here is a double bottom. 240. Nice bullish move. Shot back up, had a pretty good follow through, right? Look at back over here. That double bottom is actually right here. Okay. I think it's like 1023, 1024. If you have that data on TradeStation or anything like that, you can see this sort of thing. Okay. That's a little drop down price, but it's still rallied on up, and it's making that that lower high. Same thing is probably gonna happen down here. Okay, we have a doji, a little bit of indecision, undervalued, so it could pop up. I'll go counter trend, no problem. Look at 240. We want to set a realistic profit target. How good is a profit target? We could set it right here, but that is a little bit, not the best risk reward if you got long, right here. Not the best risk reward. We won't really know where our profit target is because we didn't have this nifty trend line right here. We could have had trend line, for example, maybe across these lows, something like that. So our profit target would have been right there. Okay, now if I look over here in a 60-minute chart, here's our double bottom right in here. And you can see it had a nice move up. I would have set my profit target right in here based off this little stopping point right in here. Okay, that's what I would have actually done on my entry point because I am counter trend. I'm not expecting this double bottom to reach this trend line here or this right here. I don't expect that to happen. Okay, we're in the undervalued, sure, but I am counter trend. I haven't seen the daily chart here make a higher high and a higher low. So there's no reason for me to say it's going to change out of trend, but I'll take longs all day long, make sure I get out of it on time. And what that means is, like, sure, you can have multiple signals come up at many different time frames, but just know when you're a counter trend, you're not going to be as profitable. So this move right here, up to here, you made a good bit of money if you made it all the way up there, but that's one signal, buy signal, counter trend. But with a short signal, you still have a more profitable trade when you go with the trend all the time. So my profit targets are a lot more realistic on with a trend as opposed to counter trend. They're a lot smaller. Okay. So every time people ask me, "You're going counter trend? Why do you always do that?" It's just I get impatient with waiting for my short signal. If I see a counter trend signal, I'm going to go ahead and trade that. I'll make money on both sides. All right. Scalping time frames. Yep. I'll go ahead and pull those up here too. What is the crude setup? So this setup isn't really here because this picture is like about a day old now, but it was just an example of going counter trend or with a trend. There's two ways you can go it. And what is the indicator down below? The indicator down below, this is just value charts. I like using candlesticks. They give me a lot better visual than the bar chart. and that's just basically what value bars is down here, but I can see it relative to a candle. That's all. So let's go ahead to Scalpers. So again, this isn't set in stone, but your long time frame can be a 30-minute chart. That'll be 6 times your base. Your medium time frame will be about 5-minute chart. That'll be your base for everything. And then you also have your short, which will probably be your entry point, will be the 1-minute chart. This is 150 base. Again, this could be a 100 tick chart. This could be a 2-minute chart. This could be whatever. Some personalities of instruments are different. They're not traded as much, so it could be 50 tick chart, that sort of thing. Just again, keep in mind they want a decent ratio, like a 1:4, 1:6, somewhere there's not a humongous disconnect between the volatility or the volume of one and the other. So these three are just a few examples of it, and I'll show you how this kind of looks here. So for this one, we're looking at what does 6 times base mean? 6 times base, your medium time frame is going to be your basis. That kind of, it's a marriage between price action on both a longer term trend and a shorter term direction. So your 5-minute chart, you'll be able to see kind of like what the longer term trend is, as well as where you can go. So with the base time frame is 5 minutes. 6 times base is 5 minutes times 6. That's 30 minutes. So for the Aussie Swissy here, we're in an uptrend, but it looks like it is starting to weaken here a little bit. Notice that we started making lower highs and lower lows. All right, there we go. That's what you want to consider a downtrend. And we're right near a trend line here, so we could assume that it's probably going to break the downside, but this could just be a correction too. Never know. That's where this multiple time frame analysis kind of comes into play here. So at the end of the day, since it is above the trend line, I'm looking for longs on 30-minute chart. Go down to 5-minute chart here. Okay, now we're clearly in a downtrend. We can see that for sure. A lot of movement to the downside here on that 5-minute. So maybe that means that I don't want to get in on it because it's not agreeing with my longer term trend. And we're kind of neutral right now at the time this picture was taken here because we're in a pennant as well. We have our higher lows and we also have lower highs. So that's just kind of sideways, no real direction. So I probably stay out of this as well, unless I really did assume it's going to be more of a bullish move because we're in an uptrend on 30-minute. I wait to trade the breakout to the upside, hopefully. So if I want to look for entry point here, I'm going to go back down now to my shorter time frame, which would be that 1-minute chart. Again, that purple time frame, that purple trend line is from the 30-minute. And when I got down the 1-minute chart, it moved so quickly it broke the trend line. So, we're talking about 30 seconds between picture take here and it shot to the downside. So, one thing you can notice here, though, by the way, again, for your personality type, look at, for example, right here, these lines that come across here. So from 86.54 to 86.52, that's only about 20 pips. Okay, so we had a nice move down here in the 1-minute time frame, but when you find your next level of support and resistance, that sort of thing, your profit targets need to be set appropriately on here, as opposed to saying you're going to short this and expect it to run down to here. Okay, that might not happen the first time. It'll probably run down to here maybe. You got to find where your legitimate levels of support and resistance are. And again, if you are trading with the trend, this could just be a bounce. That could just be a false break. Do I keep my value chart settings the same for all periods, 5-period? I typically do. I would change them though on these smaller time frames. I just didn't because I don't really trade those smaller time frames. I would trade those to maybe like a 12, something like that. That'll give me a few more bars, maybe 15 even, because I'll be over the next 15 minutes. If I'm doing a minute chart, They give me 15 minutes worth of direction of the market. But for most of my time frames, I do keep about 5. Okay, so no problem. So what the idea here is, the thing to remember is the more granular or the smaller time frames that you get in on, the bigger the reactions are going to be, or at least seem to be, when it comes to like economic data and moves. It may seem like you call it a huge move, but it may not really be that huge of a move. Plus, if you get stopped out, you might figure out why is it happening to me all the time. You gotta look at those other time frames. How do we pick the direction? How do you pick the direction? You want to look at your longer term chart, and you want to find the trend for the most part. I don't know if you were here, Sid, during the beginning part of it, but there are trends inside of trends. You want to kind of get with the longer term trend. Okay, whenever you, whenever you actually do enter a trade, ideally you want to enter in the direction of that longer term time frame. So you're looking for that direction on it. So for this one right here, we were in an uptrend, but I'm not really sure anymore because we're at a trend line. So it can go either way here. But when we look back at other time frames, say, look at our good one right here was monthly chart. Okay, we're in a downtrend on a monthly chart. So I'm looking for shorts. And then down here on weekly chart, okay, we're still in a downtrend, so I'm still looking for my short. So when I go on my daily chart here, price came up to a trend line here, and it closed down bearish. That's all 3 confirmations of looking for a short. So I would have taken a short right on this one, or at least the open of this one, if I was a position trader. So that's that really high confidence, high probability trade, because all 3 time frames are in agreement with a downtrend. Now, when it comes over here to the scalper one that we were talking about, it's hard to say we have an uptrend, but we have an idea that it could be changing, because we now are making, instead of making higher highs, we're making lower highs and lower lows. So that could be that alert that could be changing, but we are still above that trend line. So that's still bullish to me. You want to wait for it to either break to see if it breaks that 30-minute, so you know that's going to be a change of trend, and then you can look for short opportunities on a smaller time frame. You just got to kind of go with the same, like the basic rules that you know about technical analysis, and apply those. Like if it's a moving average, a 200-day moving average below that, you're short the whole time unless it goes above it. It kind of goes into play with your personality type and your trading strategy. Like I mentioned earlier on, things I say here, I'm going to give you concepts, but I can't tell you how to determine necessarily trend direction or the best time frames for you, because your strategy could be different than mine. And whenever you could be bullish, I could be bearish. That's the great thing about technical analysis. Technical analysis is all subjective. So, are we all good on the scalper side of things? Okay. In conclusion, right quick, the odds of a trade being successful are definitely improved when you're using multiple time frames in a top-down analysis approach. I'll answer that question in just a second here, Sid. So if you really want the higher probability setups, then you want to have those time frames all kind of be in agreement here. You have higher probability trades are those that agree on all time frames. And it's really important you can find your good support and resistance levels, as well as entry and exit levels when you use these time frames. You can know when a good entry point is and where a good level of support or resistance is, and you can know how to manage your stops a lot more better as well. And I think that's it. All right. So another thing to just touch on, for example, if the larger trend is to the upside, but your medium and shorter term trends are heading lower, then you just want to be like cautiously short it. Set reasonable profit targets and stops. Don't try to catch the absolute tops and bottoms per se. Yeah, and the confidence level of a trade should be determined by how time frames line up. For me personally, if I take a trade on a daily chart, I manage it on a 4-hour chart. That's kind of like how I like to see these little mini support and resistance zones where it's going to struggle. And if I manage a trade on a shorter time frame, it helps me avoid those poorly placed stops and having unreasonable profit targets, that sort of thing. All right, so what is a liquid markets and future? To be honest with you, I couldn't tell you the most liquid markets and futures. A lot of them have different volumes. It all depends on news announcements, that sort of thing. I know I like trading gold and crude, but things like RBOB and all that, they slow down. It's really hard to say. I know they come out with reports, I think, at the end of every week about all the contracts. But yes, ES is pretty liquid. That has a lot of contracts go through it all the time. Currencies, and the futures, they stay pretty liquid as well. Yeah, so right now, like the currencies, though, they're all pretty much dead because I know non-farm payroll is going to be slowing them down a little bit. Yeah, the euro dollar doesn't move exactly, especially during these announcements that are coming up on Friday. But things that some are less liquid, but when they do move, they explode, like cattle, hogs. The yen as well. The yen doesn't like to move too much. Neither does Swissy per se. But when they do move or break through a trend line, they really run. There's a lot of places, a lot of ones that do that. Do I get out of positions before non-farm? Depends on what kind of trade it is. Some of my position trades I'm in right now, I might put them down at break even. But if I'm like in a 30-minute short or long, yeah, I'll probably close them out. Which is the cost efficient and fast? What is a cost efficient and fast to the market on a platform? I could not tell you that, Sid, to be honest with you. Yeah, that's a bit too technical for me. I just pretty much use TradeStation and I deal with it until we come up with our platform. Yeah, I haven't been able to try all the platforms to tell you which one's faster and all that kind of thing. Are we all good for anything else? If we have any more questions, I'm more than happy to answer them. Hopefully this concept, it can take a little while to get used to, but once you get it, it can really work out. I get questions all the time. I know Thomas does in his training room, or emails asking how you look through so many time frames so quickly, blah, blah, blah. Once you get used to it, it starts falling into place. Base and higher time frame determines trend. The shortest time frame is for entry and stop with a target on a higher time frame. You can do it that way, Keith. I kind of do that a lot of times. It depends. If I love finding reversals. So if I see the longer term time frames moving down, I see a signal that might be reversing soon, I look for those entry points on that smaller time frame. I really will set a profit target for a longer term time frame. So for right now, actually, right now, I might be able to pull up TradeStation for you. Is results of the drawing for the indicators which name? I don't know about that, Keith. I'm not sure if they are yet. But yes, you want to trade your higher time frame. Your go-to chart would be that medium-term time frame, that base chart. So whatever you define that as, that's where you get to see what direction the market's going to be going, shorter term, and you know what it is longer term. And just you want to always trade with the trend. You can go counter trend, which I do all the time. Just you have to be a little bit more tighter, I guess more realistic with your target profits. Unless you see a clearly defined sort of indication it's going to change, can you kind of set your profit targets to the more realistic level on, say, a smaller time frame. So it just really depends on your trading style, I guess. Yes, it is being recorded. Can I show an example? Okay, give me just 1 second here. Try to pull up something right quick. These are a good way to learn multiple time frame analysis and also order flow in futures markets. The best way to learn multiple time frame analysis is just to do it, really. Whenever you get in it on the thing, like whenever you're in, say, the futures trading room or something like that, you know, you'll see Thomas or myself occasionally say we're not looking for entry point here, we're looking at 240s, this, blah, blah. If that time frame doesn't line up with you, you know how to take that trade. Whenever I do my trades, when I do a trading room or Thomas is a trading room, we have to meet the demand of everyone in there. So for our position traders, swing traders, scalpers, that sort of thing, so we look at multiple time frames. And when people ask questions like, what do you think about this? We have to kind of adjust it toward their trading style, and we'll look at on 3-minute time frames that way. So, I mean, once you get the concept, you kind of establish your 3 time frames every time. You should be able to know if you're about to get into a position trade or a swing trade. You'll know what time frames you use, that sort of thing. I'm going to open up a chart right quick here to give you an example of what I did today. I'm actually still in on this trade, actually. I went kind of trend on nat gas, and it's working out for me nicely. Let me have everything load up here. After we do this, I will let's go ahead and end the webinar tonight here. But let me show you this. Nat gas pretty well into a downtrend. Can have the support level here though, and if I look at my other time frames, I'll try to step it through here to give you my reasoning for it. I look at many time frames, so try to bear with me here. Enable, disable, value candles. So up on top, monthly chart here for nat gas. We're in a range. This red support level is absolute lows for nat gas, and we've been down here for a little bit, so I'm expecting it to bounce back up because we're in a tight range, right? So I'm neutral for it. There's no real decision on which way it's going to go. So there we go. Longer term, I can trade both sides, up or down, really. Weekly chart. Okay, kind of sideways. This is still that neutral sideways movement because we have, you know, it hit these lows here, these highs, trying to the downside. Right here, though, it looks like we have bullish divergence right here on a sideways move. Plus, had a gap down, and it came to that trend line, did a retest, and bounced back up a little bit. Makes me believe this is a weekly double bottom, right? Plus a bullish divergence. Looks good to me. I'm going to look for just a buy right here. So I'll move this out of the way. Next, we go to our daily. Here's that double bottom right here, this low, and this low over here. We did that break down there. Saw momentum starting to pick up a little bit. You can see momentum up here starting to get a little more shallow. and then look at the 240. 240 still in the downtrend, and then I saw right here this could be a double bottom as well, but then I saw it look like it was going to close out to a hammer, which it did, a red tip hammer. All right, and then I looked over at my 60s, saw that double bottom, bullish divergence right in here as well. It looks like it wasn't a spinning top. I was hoping it was going to be a hammer, but needless to say, whenever I looked at a 250 tick, yeah, right here, I took a long off this bounce down here, and I'm in it. That's a profit target at a somewhat realistic level. I waited for it to get past this high, took off partial profit when it break even, and my real profit target was going to be the trend line here across these highs, and it reached it, and I'm still in it right now. Break even stop. The reason I have it right here is I didn't close it completely because I could have caught the absolute bottom. I never know. Okay, because we have all these kind of bullish moves, double bottoms on weekly, all that kind of stuff. So I'm gonna keep that break even, see what happens. You know, I'm expecting some pullback. As long as we don't make a lower low, then I should be good, right? So that's what I did. I went counter on that one, but I reached my profit target. Okay, so I'm aware of that. I'm aware of where it's going to be, and I based it off of the 240. So it's a smaller profit target than it would be right here on daily chart, where I expect my profit target to be right up in here at 3.62. That's where it should come up to. But so that basically I'm using a 240 for my entry point type thing. That candlestick reversal is how I'm using it. What advantage of using ticks first time frames? Ticks are really good during less volatile times because it could take a long time for an hourly chart to close out, but you can see tick charts, how many trades been put into place, that sort of thing, so you can get to see a different look at that. So you can see how busy it is, how people are actually in the market. You can have, you know, 150 tick candles, whatever, close out, and the time it takes for a 4 hour to close out. You can see what's going on micro inside that chart. I mean, there's not necessarily a correlation between ticks and time. Sometimes they line up and look the same, but other times they don't. It just kind of helps you fine tune entry points sometimes. And so I wanted a really micro level of how to get in on it right here. I mean, this could be a bullish divergence on a 100 tick for nat gas. I mean, I don't know. That's a bullish divergence right there on the 100 tick. Okay. At the end of the day, everything is, price is always reflected in the charts. It's just a different way of visualizing it. Same with indicators. Indicators just show price differently. If you look at price, it's moving across every time frame at the same time. It's always moving across your 4 hour, your daily. It's just things are hidden. That's all. So if you want to see what's going on inside that monthly candle, you gotta go really far down into it to kind of see what's going on micro level. And when you see a lot of things change in micro, it could be at the beginning of the change on a major scale. All right, so if that's it, we'll go ahead and call it a night then. That's basically the concept of it. Once you start playing with it a little bit, it becomes a lot easier, and you can decide on the fly really if you're going to get into a swing trade or a position trade or scalping trade, that sort of thing. Hopefully this will help out, especially when you're in the trading rooms and you wonder how we're getting in our trades when it seems like to be contrary to what you see, that sort of thing. It's all about that trading style you're doing and what kind of trade you're trying to find. So hopefully there won't be any confusion of why we're going counter trend here, why is the profit target here. It all kind of bases off those few concepts about defining different periods, and you know, counter trend has more realistic profit targets and things of that nature. All right, good deal. No problem. Hope everyone has an excellent night. I know we went a little bit past time. But if you have any questions, just go ahead and email me. My email is nmcgee@microquant.com. I'll answer emails, and I'm in the future trading room a lot of times for a little bit, and I send out my little snippets of what I think is going to happen to Thomas and whatnot. So, okay, let me go ahead and send my email here. There we go. So my email is right there. I sent it to the chat for everyone to see. All right, you have a good night. Thanks for coming.